given that we're in a future where AI seems really important and energy seems real important, sports seems to be a growing investment area for private equity. What's interesting? What's exciting? Which of those three would you lean into more than the others, and why?
Wow, that is an incredibly hard question. My answer is always option D, all of the above. Assuming that option D is not an option and I actually need to choose, I'm really going to probably emphasize both sports and energy in different ways for different reasons. And I think
Okay.
artificial intelligence is incredible. It'll change the world, but a lot of those valuations are challenging, not to
Yeah.
justify, but they're challenging to know whether you're buying the company that will change the world or whether you're buying
Right.
something that's really just hype. And so we tend to put more focus on either the picks and shovels around AI or the industries that will indirectly benefit from artificial intelligence, like energy. And I'll describe
Right.
why, but like professional sports. So with energy, it's really a supply and demand story, right? You have extremely fueled demand across every corner of the world. You have increasing population. You have a huge demand from power. You have a huge demand from artificial intelligence, from data center build out. I'm sure every single guest that you've had on the podcast has said the exact same thing. Equally, on the supply side, you have radically reduced supply of energy producers. And even more powerful, you have a radical reduction in the number of institutional investors or sponsors that are on this planet to do energy in a dedicated fashion. This is a wild stat, and I almost don't believe it every time I hear it. If you ask yourself how many institutional investors are out there that have $1 billion or more of capital that do nothing but technology, that
Hmm.
number is very high. The number of institutional investors that do nothing but energy that have $1 billion or more is three. There
Hmm.
are three in the world,
That's it.
institutional investors that do that.
Wow.
That is a wild stat. NCAP, Quantum, and NGP. And oh, by the way, we own pieces of NCAP and Quantum through our GP stake strategy. But all that aside, there are not nearly enough capital providers that can fuel these companies that need to be in place to satisfy all of the demand that we know exists. That is one of the best opportunity sets that we see in the world. We like every energy deal that we can get our hands on that is the right setup and the right way to play it, we are pursuing with full force. Now, professional sports is really interesting. So when you invest in a professional sports team, most people approach these assets, they think of them as kind of vanity assets or trophy assets. These are things that, ultra wealthy people buy to show off or become, more connected within their local community. That may or may not be true in elements, but from a pure investment standpoint, it actually looks a lot like a traditional GB stake. These are ultra low correlation assets with low leverage, with high return potential. They have effectively no correlation to the rest of the world. You're operating a business in a legal monopoly where more of these cannot be created. You have durable cash flow streams that are created because every team in every league earns their pro rata share of those league proceeds, regardless of whether you come in first place, last place, or anywhere in between. That is a highly asymmetric setup that tends to produce really, really strong investment results. And when you look at how does AI impact sports as an example, you really need to focus on what drives sports valuations, which are media rights, right? These businesses exist and are ultra profitable because of their pro rata share of the league media rights, right? An NFL team, before they play a game, earns nearly $500 million per team just starting off the bat, right? They haven't played a single game and they're getting paid almost $500 million in free cash flow, driven significantly by the media rights associated with them. Where does AI play into that? We are not there yet, but we will get to a spot very quickly in the world where instead of you tuning into your local game and seeing the same ad as everyone else, you will tune into your local game and you will see an ad that is ultra personalized to you based on your chat GPT conversation that you had 30 minutes ago about the flowers you forgot to buy your wife for your anniversary or whatever it might be. And oh, by the way, here's the ad that shows up on your game and it's, go to your local flower store and buy this. Or your wife nags you because you didn't buy toilet paper for the third time. And Charmin Ultra Strong is the next thing on the ad, right? That is ultra powerful. And it is the only place on the planet where you can really get folks to watch ads and content in a dedicated way. Everywhere else, you've outsourced it to streaming services, you've cut the cord. But if you are watching the US Open or you're watching, a World Cup game, you are glued to that screen, doing it in a community environment.
We're seeing a ton of growth and interest in secondaries. I think we're also seeing a ton of growth in the overall alternative investment
Yep.
market, and probably a little bit more exposure from the retail market as well as institutional investor and family offices. Where do you see growth happening in a sector basis or in a secondaries world, and how do you guys play that?
You're right that secondaries have exploded. It's no secret that, investors are hungry for forms of distribution and forms of yield. And it's been a rough couple of years from a distribution standpoint, generally speaking, across private assets. And so secondaries are booming for that reason. Folks need to access liquidity for a variety of different reasons. We we really don't play that much in kind of the generic secondary space where, for lack of a better term, we're competing with the world's largest multi billion dollar type secondaries firms, because that's a competitive process that we feel like we're not going to generate a huge amount of edge in. Where we do believe that there is an enormous amount of edge that we can garner is actually within the GP stakes space specifically. So when you think about what makes GP stakes unique, you can rewind this conversation and listen to the last hour. What are the drawbacks? Well, GP stakes are typically highly illiquid assets. You can't sell them. There's no free market that trades them. These are assets that are meant to
Right.
be held forever, effectively. And so that piece alone kind of breaks the generic secondaries model for most investors who are looking to buy something and have a really shortened J curve or hold life, if those kind of terms ring a bell. GP stakes are on the opposite end of the spectrum. And so as a byproduct, we can sit in a unique spot where we're set up to not only know these assets better than anyone on the planet, but as one of the few approved buyers, preferred buyers that can move quickly, can act with certainty, and can structure things to meet the needs of various sellers. And so there's no perfect number on this, but we've been told we represent about 75% of the global secondaries market in GP stakes. And when you talk about the ability to set price, the ability to know what things should trade for, what things will not, and to get deals done in a way that anyone else can't, we're positioned really, really well.